Right, let's run through those. On the short, you've got Truworths.
Truworths. So again, we got numbers out in February that weren't particularly exciting. I think we had about a 3% drop in revenue. One of the things that I think is the company is struggling with as well, obviously it's a credit retailer as well, so it has brought down its level of credit sales recently, but it's also struggling with I suppose the implementation of the new credit regulations as well, which is really, you have to do the affordability studies. It's not allowing them to lend, to sell as much as they used to. And again, you look at the South African consumer, I don't know, you walk through Sandton City these days, everything is on sale. Every shop is on sale. It's a very difficult environment, and I think people are starting to realize, you don't need to pay full price for anything anymore at a retailer. You just wait, and they have to move the stock eventually, and they're gonna be discounting at 50 to 70% off, and that's when you go shopping these days. So I think a very tough environment for them. I think struggling at the moment. Certainly, I don't think a much weaker rand is going to help them either. So at these levels, probably a short.
Right, and then your long is Brait.
As a Brait, that's a little bit opportunistic. So again, we've had the signing of Article 50. We've had the sterling under a huge amount of pressure. So we saw it affect Brait and its NAV. But I mean, people must understand Brait is still, I think, a fantastically run business, and the way that they invest is very, very intelligent, and they're investing for the long term. They've got, I think, good quality assets under there, although very Brexit exposed. I think this is very much a case of buying when there's blood on the streets. This today was a historic moment for the UK leaving the Eurozone and signing the letter that triggered Article 50. Now, for me, that seems like the right time to be going shopping for UK exposed shares. I mean, it's a time. Again, you look at what they've got. Okay, so obviously New Look is expanding outside of the UK as well. But I mean, you look at Premier, you look at Iceland, you look at that sort of FMCG food services component to their business. They operate in a very competitive environment in the UK. Now suddenly you put up tariff barriers, you're supplying some that maybe the offshore players don't have as much. So definitely, I think valuations, it's a buy.
Right, that is Gary Booysen's long, that is Brait.